Hi, it's Devon Naika from Retirement Wellness SA. In this video, I'm going through a lot more of fine print, and in particular, I want to cover waiting periods. So what are the waiting periods that you want to be aware of? And we want to go through this, having a look at death benefits. We're going to have a look at funeral benefits. We're going to have a look at disability benefits and also illness or dread disease benefits. Now, why this is critically important for you is a lot of times you're not in a position where you read your policy document and you only get to find out at the time that you're actually going through a claim or your family members going through a claim, what are some of the terms and conditions or what are the waiting periods. And this sort of can set you off guard. So you might have an expectation that the insurance company is going to make a payment very quickly, but the insurance company actually has a specified time period. And during that window period, how would you sustain yourself financially? So in this video, we're going to be covering some of the general waiting periods. How does that apply for insurance companies? And more specifically, what can you do in order to navigate around the waiting periods? Excellent. So let's head over to the iPad, and we're going to start this off having a look at the death benefit. So pretty straightforward, but we are analyzing from a death perspective, how long can an insurance company take in order to make payment? Now, what you want to do to ensure that your claims are going to be successful is you always want to make sure that you've been honest with the insurance company. So you've provided them with the right information. You also want to make sure that your information, so all your details are up to date. So all your information is current, current and up to date, because that just makes the processing a lot easier. And if there's any changes, so if you've had any changes to your circumstances, that you notify them about those changes, because that sort of helps in the process when it comes to claim stage. So in terms of a death benefit, it's pretty straightforward if you happen to pass away naturally, meaning in your sleep, if you have to pass away through an illness or just a natural death, then it's pretty straightforward. But if it was something, and in that case, it's just a matter of, I would say you should allocate 3 to 6 months, mainly because your family is going through a grieving process, and it's not likely that they're going to instantly submit documents to the insurance company for a claim. So you want to allow yourself that window period, 3 to 6 months, in order for them to, for the insurance company to settle themselves and your family to get over some of the grieving process and then process the paperwork. Now, a key thing here is if you are working with a period of 3 to 6 months, so let's say, 3 months and 6 months. What happens in this instance where your family is now left without an income or they're left without capital? How do they pay for the expenses? So how do they pay for the bond? How do they pay for water and lights and just the utilities? How do they ensure that they're able to get their groceries? So one of the things that you want to set up here is what I would call an emergency fund. And the emergency fund should be 3 to 6 months of your expenses. So you want to calculate this to 3 to 6 months of expenses. I'll use a very, very basic example. Let's just assume that your expenses are 10,000 for the month. So that's what you want to keep in an emergency fund. You take your 10,000. If it's 3 months, it's 3 times 10,000. So that's 30,000. If it's 6 months, it's 6 times 10,000, so 60,000. And you want to keep this inside of a bank account, maybe your spouse's bank account, or your family member that you're protecting their bank account, bearing in mind that this money has to be there to tide them over. You see, not in your bank account, because bank accounts get frozen. So your bank account will get frozen at the time of you passing away, which means your family won't gain access to that. So you want to do an emergency fund, and also you want to make sure that it's in someone else's name. Now, what happens in a case where death is not natural, meaning it's a murder or it's a killing? Now, in that instance, you have to bear in mind that the insurance company will be forced to wait for investigations to take place. And they can only start their process once all of that is done, which means it stretches out this period. See, it is unfortunate, but again, you have to constantly make sure that you are touching base with the insurance company, providing them with the information that they need in order to, that your family is doing this rather, in order to support, like to move through the process and to get the claim paid out. So in that instance, you would need to ensure that you're protecting a lot longer in terms of your emergency fund. So now we've covered death benefits and we've looked at that in great detail, but what about funeral benefits? So how does it work when it comes to funeral cover? Let's go have a look at that. Now, in terms of funeral benefits, you're made to believe that it's a 24 or 48-hour period. And I'm saying you're made to believe, or we made to believe, but the fine print behind this is it's 28 to 48 hours from when they receive the information. See, this is from receipt. And most companies operate in this way. So the insurance companies, for fraud purposes, may not necessarily make the payment straight away. They need information in order to confirm that this is accurate. So there's a notice of death form, there's the death certificate that gets provided to them, and when there's also a doctor's note. So when they have that information, that's confirmation to them that you have actually passed on, in which case they can now process the funeral cover claim. So bearing in mind, in each instance, there's always some paperwork that must be completed. So it's only when that paperwork is submitted, finalized, and authorized that the insurance company would then make payment of the funeral cover, which means it is possible by that time that your family might have already had to have taken care of the funeral expense. So the funeral cover itself is not paying, may not necessarily pay on time or before the funeral. It's more likely that your family has to cover the funeral costs, and this happens at a later stage because they need the paperwork and just confirmation. So again, you need to make sure that there's some kind of liquidity. You have to make sure that there's the emergency fund or money that's kept aside to carry your family through this period, see, and also to cover the cost of the funeral itself. So that's in terms of funeral cover. We're going to look at two more, and these are very important aspects. One is in terms of disability. Now remember, disability is simply you being unable to work. And that could happen in one of two routes. One could be temporary, and the other could be permanent. So if it's a temporary disability, it means that you're likely to recover from that. There might be a waiting period there, and that's what you want to determine. So let's just say the waiting period is 1 month. I'll use an example. So you happen to have a heart attack. Your temporary disability has a 1 month waiting period. So what it means is for the first 30 days, the insurance company will not make a payment. But if you're unable to work beyond that first 30 days, then they will. So this is what the 1 month is all about. If it's something, let's just take a flu, you're unable to work for 3 days, you don't go into the office. Now you haven't passed your full 1 month period, in which case the insurance company is not able to start making claims. They won't be able to make payments to you. So whatever happens that leads to you not being able to work, if you've taken up income protection or temporary disability, you want to be mindful of the waiting periods. There's some instances where this could be 7 days, especially if you're running a business or earning commission. The premium is a bit higher, but it makes it more practical because if you're unable to work, you're impacted straight away. And there's some instances where you could have this to be longer. So I'll use an example. If you have enough money stored in your emergency fund, let's say you've got enough to cover you for 3 months, then you can deliberately extend your waiting period here. You could make it 3 months because you've got money in your emergency fund, and that will drop your premium down. So I've given you an important secret there, important premium saving tip. And then we'll quickly have a look at the permanent disability. Usually insurance companies wait for 24 months. So if you have a temporary disability, they wait 24 months before they can confirm that it would be permanent. But there are some instances where, let's say there was a serious accident and you're just never going to recover from that. In that instance, the insurance company can say, it's now permanent disability. They don't have to wait the waiting period. They can make the payment on a lot sooner. So on the permanent side, they're looking for proof that you're not going to be in a position to return. Remember, sometimes the disability can be an illness, or something physically happening with you. Sometimes it could also be mentally. So you're just not in a space mentally to be able to continue working. Good. So that covers both aspects of temporary and permanent disability in terms of waiting periods. We've got one last one, and this is in terms of your illness benefit. Now, the illness one can be a bit tricky because what the insurance company is confirming is not so much that you've had the illness, but that the illness matches their criteria. So for example, let's say heart attack. The insurance company would have a criteria for what they determine to be a heart attack. And when you're submitting your documents, you basically are doing a check with them. They're going to do a check to make sure that what you've had was indeed what they consider to be a heart attack in terms of their fine print. And then they're in a position to start making payment. Again, this is not an overnight thing. Because of a lot of fraud that has taken place, the insurance company would have their paperwork. They want to do a lot of verification. They might ask you for information. They will actually ask you for information about the hospital details, the information about treating doctors. They will have their own forms for you to complete. That's just to confirm that you did have that illness and the extent of that illness. How long would something like this take you? It depends. It depends on how quickly you can get the paperwork in. You also are dependent, remember, on doctors completing medical forms. Sometimes they might be busy, so that could stretch the process out. Again, I like to use the same 3 to 6 month period for you. So you want to work with roughly 3 to 6 months. And again, you can see why that emergency fund becomes critical. Because in the instance that you took ill and let's say the heart attack, you're unable to work, let's say 6 months. If you've got a medical aid and you've got gap cover and everything works out, in terms of the doctor's rates are in line, then medical aid's covering the hospital bills. The challenge is for those 3 to 6 months, you are not able to work, which means you're without an income. If you do have temporary disability, you can always lodge a claim there. But if you've got your illness benefit, you then just want to push for the illness benefit claim to happen as quickly as possible. And you can do this by ensuring you are providing the insurance company with whatever documents they need, completing any additional requirements that are needed in order to fulfill this payment of the claim. Now, this video covered everything in detail in terms of waiting periods. So you should be empowered to ensure that you are protected from this. Remember, you can't control these waiting periods to the fullest extent, meaning you can't negotiate a lot of these waiting periods with the insurance company. It's predetermined. You could adjust them in certain instances, like I've shared with you on temporary disability, but ultimately you're still going to abide by what the insurance company provides you with. They won't do something for you and something completely different for everybody else. It's sort of like a generic product. So what you want to do is work around it. And one of the secrets I've shown you to working around it is creating this thing called an emergency fund. So I'd like to hear from you. Is the idea of an emergency fund very good to cover the gap of the waiting period? So post your comment below and let me know. If you've not already done so, remember to click subscribe so that you're able to get the videos from this series as soon as we produce it. And remember to watch the previous videos in the series because I recap a lot of the foundational elements that you need in order to ensure that you are getting the most out of your life cover.